Hello, everyone, and welcome to another CW webinar. Vasco, and me and my team are here to bring you the main highlights of the global quicklime, slackline, and hydraulic lime market report. And this is the 2022 update. So, for today's presentation, I would like to introduce myself, Vasco Teixeira, a business analyst at CW Group, and my colleague Prashant Singh, director at CW Group. So, on today's agenda, we will start with an introduction of our company, what is that we do, what we have to offer, and share the main highlights of the new report update. So CW is present across three distinct verticals, which are advisory, research, and media. Under advisory, CW works with major global consultancies and leading institutions, including the World Bank and funds on projects. And we provide consulting and advisory expertise on diverse product portfolio. For example, a recent sample on advisory projects provided include a detailed study on circular economy for the MENA and the West Africa regions. And some other examples include a complete business process analysis um, for an online art gallery website. Under the research umbrella, we focus on a global cement demand as well as a detailed industry and country reports. And we provide historical as well as forecasts for markets in a variety of products, including one of our main products, the TPR, which stands for Trade Prices Report, and the VFR, which stands for Volume Forecast Report, and the White Cement Report. We also provide commodity price assessments for cement, clinker, as well as pet coke and coal. At last, under the media umbrella, we provide access to a vast database. You can subscribe to newsletters for topics of interest, including cement, building materials, paper and pulp, pet coke, bulk, and coal. And we also have some industry specific meetings. We have started to hold in person again, and our next meeting is called Slag and Ash Trade 2022, which will take place in Cologne, in Germany, on the 18th and the 19th of May. So if you are interested, please do not hesitate to contact us for more information. So now going into the global quicklime, slackline, and hydraulic lime market report. This report includes an overview of the global lime market, highlighting production, consumption, and its market size. We provide a historical overview and an outlook for the next 5 years, divided by region, and we also present key market players. Lastly, the report also includes a detailed list of the major the major producers for lime. So without further ado, let's dive into today's presentation, the CW's Global Quicklime, Slackline, and Hydraulic Lime Market Report. To start off, we are going to present the global economic prospects for 2022. And according to the IMF's January update, the global economic growth is estimated at 3.8%. However, the IMF's economic outlook as of now does not represent the actual economic scenario we are facing, as the world has been changing drastically due to a series of geopolitical events, including the Russia-Ukraine conflict. And a new global economic outlook update is going to be released on April 19th, which of course will likely show a downward revision to the global economic growth. More recently, at the beginning of March, Goldman Sachs released its economic outlook, revising downward the global growth to 3.4% this year, mostly due to the Russia Ukraine conflict, which is expected to exacerbate the supply demand imbalance and surging inflation rates. However, in the second half of this year, improvements in goods and labor supply combined with tighter monetary policy is expected to be sufficient to bring inflation back near the developed markets central banks targets over the next 2 years. In terms of the Russia Ukraine conflict, Goldman Sachs expects the global impact to be sizable, with Europe and other commodity importing countries being more affected because of the surging inflation from the sharp increase in commodity prices. For instance, Germany economy could be impacted by as much as 220 to 240 billion euros if Russia turns off natural gas access. Meanwhile, the S&P Global expects the global economy to grow by 3.3% in its latest report, and this was revised downward from 4.1 due to the sharp contractions in the Russia and Ukraine economies and the Western Europe economy, which is seeing a surge in prices of natural gas, oil, and electricity. Although all regions are expected to be affected by war-related supply disruptions, with the exception of Middle East and North Africa, where oil and gas exporters are likely to benefit from these higher prices. Moreover, the World Bank recently reported that it expects Europe and Central Asia economies to shrink by 4.1% this year as the economy shocks from the war compound the ongoing impacts of the pandemic. Ukraine, for instance, is expected to see an economic decline of 41.1% this year, although the magnitude of the contraction will depend on the duration and the intensity of the war. Meanwhile, for Russia, the World Bank expects a decline of 11.2%, with its economy plunging into a deep recession. Although these figures will obviously be updated to reflect the impact of the sanctions on Russia and the magnitude of the destruction in Ukraine. So, of course, we cannot talk about the global economic outlook without mentioning the recent geopolitical events that have been taking place in Europe, Middle East, and in Asia. So, on one side, we have the Russia-Ukraine conflict, which started in late February, being by far the one of the worst conflicts on European soil since the Second World War. And the economic impact of this conflict has already negatively changed the global economy. According to the WTO, one of the most immediate economic impacts of the war has been the sharp rise in the price of food, energy, and fertilizers, and some important minerals, given the fact that those two countries are the key suppliers of these commodities in the world market. Furthermore, the Russia economy is seeing major sanctions by the Western nations, including the freezing of Russian central bank assets, partial access restriction to the international payments system, SWIFT, and stop from Germany to its Russian pipeline project. Moreover, as of today, the United Nations reported that there is no chance at the moment of a ceasefire, indicating that this conflict is far from ending. The outcome of this conflict, whenever season end, will be economically catastrophic for both Ukraine and Russia, not to count on the humanitarian crisis and the toll it will inflict on Ukraine's European neighbors. Then we also have other complex events, including China's possible confrontation with Taiwan. And China has been, for the past couple of months, displaying its military power via sea and air near the island, raising further concerns in the Taiwan Straits. And lastly, we also have the Iran nuclear agreement, which is still ongoing and reached an impasse at the beginning of April, which is also raising more concerns about its resolution in the short term period. Um, and this impasse, according to Iran, is because of the US due to its turbulent dynamics in domestic politics. And in addition, new introduced sanctions on Russia provide Iran an opportunity to fight back against sanctions from the United States. So, now to continue with our presentation, I would like to pass it to my colleague Prashant Singh. And thank you once again for your time and your attention.
Hello, everybody, and welcome. So thank you, Vasco, for the update. And let's begin to dive into the actual content of the report. So on this following slide, when we look at this, what we see is a heat map showing the sort of production of lime. And what we would like to focus on, the fact is that almost 80% of global lime production is concentrated in Asia, of which almost 60% of total global production is in China. It's in and of itself. The next major producer is India, and to sort of understand the disparity, India is less than 5%. Of global lime production. So there is a vast gulf between what you see being produced in China and the second largest producer. Fortunately, there are some other regions, for example, the Middle East and Africa, which are small regions, but these have been experiencing rapid growth, driven particularly by the aluminum smelting and metallurgical sector, respectively. And this was at least the case prior to this recent upsurge in energy costs. As you are all aware, aluminum smelting is a very high energy driven process. So increasing energy costs tend to have a negative impact on sort of production, actual production going forward. So it will remain to be seen how the rest of the year bears out, and if we are able to see energy prices come back to some semblance of normality. And that is essential for industrial sectors such as steel as well, which is a major consumer of quicklime, for growth to anywhere reach the same levels over the past 5 years as going forward. So on the next slide, please, what we see is a encapsulation of what has been happening over the past 5 years. And what we would like to focus on is that global lime production is estimated to have declined by about less than 0.5%. And this is predominantly driven by decreases in China, whereas lime production or quicklime production has been increasing in other regions. But because of the sheer volume and weight of China, it has a larger than effect than any other increases by other regions. Quicklime production in terms of lime production by type is pretty stable, with quicklime hovering around 70 to 75% of production, and quicklime and slake lime are particularly prevalent in developing countries and focused on the civil construction output. We expect quicklime production to have decreased by around 2% from 2017 to 2022 and we have expected slake lime to decrease by about 1%. Meanwhile, hydrating lime is expected to have increased by almost 5% over the period. And hydrated lime is actually a more complex process than slaking. and manufacturers often produce hydrating lime in-house and then sell it to various end user segments. In terms of formal, captive, and informal production, formal production roughly accounts for 60% of global production, and this kind of production is mostly common in Africa and the Middle East. And in smaller markets which do not have huge steel or aluminum sectors. Formal production sizes of kilns is usually between 300 to 600 tons per day. Captive production, on the other hand, accounts for the vast, well, not the vast, almost 40, the remainder 40%, almost 40%, and is found in China, India, and the US, and also Russia, which are some of the largest steel and aluminum manufacturer locations. Here, kilns are between 600 to 1,000 tons per day. Smaller, informal production, which is not accurately measured, is mostly found in countries including China and India, which use artisanal small sliced kilns to manufacture limited amounts of lime, which is basically used for fertilizer or on construction projects. So on this page, you can have a snapshot of the actual lime market, and we expect the market size of the global lime market to have increased at about 0.5% CAGR over 2017 to 2022 And this has been mostly driven by regions including Africa, which has been growing at almost at a CAGR of 5%, and the Middle East at a CAGR of around 3%. The biggest region, which is the Asia Pacific region in terms of market size, has actually seen a decrease, which has been driven in previous years by Japan and Thailand, but also will probably likely see a decrease driven by China and the problems it is encountering in its construction sector, which is expected to have a consequential impact on the steel demand, which will obviously impact quicklime production and consumption. In terms of overall lime consumption, we estimate that the total volume has seen a decline at a CAGR of around 0.3%, meaning it's been relatively stable over the past 5 years, but that period of stability is likely to undergo significant changes in the next 5 years. So on the next slide, in the outlook section, we would like to share with you what we expect going forward. So as things stand now, with some limited impact of the Russia-Ukraine conflict, the high rate of global inflation, supply chain imbalances that are prevailing, we expect limited volume increase in terms of production, slightly at a CAGR of 0.2% for hydrating and quicklime. And overall, quicklime is not likely, the lime market is not likely to see significant change. Although China's demand is likely to decline, it will be more than made up by increases in other Asian countries such as the Philippines, Vietnam, India, which will be seeing an expected increase over the forecast period. Meanwhile, slate lime is expected to decline by around 2%, and we expect markets in Africa, like South Africa and the Middle East, particularly the UAE, to see the biggest growth from 2022E to 2027. So what are the factors on the next slide? You'll see what are the factors that are sort of impacting this production scenario. And the one that I think that has been already talked about numerous times, but unfortunately which cannot escape, is the Russia-Ukraine conflict. And this has caused global energy prices to skyrocket, especially for oil and natural gas. And the fact that Russia supplies almost 40% of Europe's natural gas, and around almost a third of the region's oil, European metal producers, particularly across steel and aluminum and all of these other products, are seeing significant upticks in terms of electricity costs. To put into perspective, there are some steel mills which are electric arc furnaces in Spain have actually had to shut down due to the almost tripling in terms of energy costs over the past few months, which make it simply unsustainable and economically unviable to operate the furnace. Major European steel producers such as Glencore and Norsk Hydro, they actually announced way back in January 18th and an alarm saying that rising energy costs are going to impact aluminum and zinc production. And European gas prices had actually at that point gone from $67 or almost $68 in early March, and we're 140% up from the start of the year. So putting in question all of the planning, economic planning, and the financial viability of all of these operations. As a leading exporter, Russia supplies a lot of aluminum, copper, nickel, and this conflict has actually driven up the prices for all of these commodities. Western consumers or companies are making conscious efforts to not buy supplies from Russia. But this brings with its own supply chain challenges because it is very hard to substitute a like for like on a short-term basis, and especially in an environment where there are very, very significant supply chain imbalances that are already existing due to COVID-19 and are not likely to sort of be resolved anytime soon. So these challenges are going to be there for at least the remainder of this year and possibly sometime into the next year. For a case in point, in China, on March 23rd, the Chinese government imposed a lockdown in the city of Tangshan, and which resulted in iron ore prices increasing because it is a top steel-making region. And over the past couple of weeks, or you have all been hearing about the lockdown in Shanghai, which is a city of 26 million people. And the economic output of this city is now has been severely impacted. Now, as long as China pursues a zero tolerance policy, we should expect and factor in significant flare-ups over the course of the year. So this is not an unprecedented event. This will likely be actually sort of the new norm unless China decides to review its strategy. Lastly, global inflation has already been rising, not primarily due to what was happening in Ukraine and Russia, but has already been happening due to supply chain imbalances from COVID. The Russia-Ukraine conflict has only exacerbated these, putting into pressure additional fuel prices and food prices. Unfortunately, there are no quick solutions to this issue, and therefore this means that central banks will have to be more aggressive to quell inflation And for developing countries, that means that more government aid or subsidies will go out, possibly impacting allocations for industrial growth, which could have important um, negative consequences on sort of demand for lime from steel and other sectors as we go forward. So on the next page, what we see is lime production is expected to actually increase by roughly a CAGR of the global market size expected to increase by a CAGR of 2.1%. And this will primarily be driven by Asia Pacific and Africa. Asia Pacific's market size is actually expected to increase almost by 2%, with ASEAN members, Malaysia, Thailand, Vietnam, and the Philippines expected to see the highest increase. At the same time, South Africa and Brazil, both big commodity exporters of different types, are expected to see market sizes increase by almost 4%. And the United States, meanwhile, is expected to see its market size increase by almost 2%. In terms of consumption, steel will remain the main driver and is expected to do so. These consumption trends are not likely to change. This is not an industry that sees quick innovations, but we do expect going forward that the FGD sector should see significant increases given the attention given to reducing GHG emissions across industries. Finally, I would like to sum up on the next slide, as you see, what we are projecting over the course of the next 5 years and what we have seen. So overall global growth is going to be affected by COVID-19 variants, which are still a new one, has just been discovered a couple of weeks ago, the XE variant. Inflation is rampant, and inflation is both in the developed world and developing world, and ongoing geopolitical events. There seems to be no end to a geopolitical crises. As soon as one ends or is ending, another one keeps cropping up somewhere else in the world. We expect global lime consumption this year to decline, primarily driven by China and predominantly by its steel sector. We expect lime consumption to decline between 2017 and 2022, whereas we expect the global market size to have actually increased due to pricing pressure. Over the next 5 years, the market is expected to rebound after a challenging 2022 and 2023 and grow, driven by paper and pulp, metallurgy and ore, and oil sectors. And we expect, of course, the market size to be actually driven by consumption, but significant pricing pressure due to higher levels of energy prices than previously experienced is expected to become the new norm. So with that, I would like to thank you and would invite you to get in touch with us should you have any questions or you would like to discuss any other reports. We'd be happy to answer your questions. So I would like to wish everybody a good day and thank you for joining us this morning.